get started here. I am an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All trades placed by me are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Here is the position disclosure. Thank you, Pat. All right, let's get started here. Wow, what a day. SPYs are up. It looks like $1 from where we closed right now off of the Netflix earnings. Qs are up like $1 after the close here also. Wait, no, is it more than that? I looked at the wrong thing. Where did the Qs close? Close at 341. Yeah, Qs are up $1.40, $1.50. Tesla numbers looking honestly really solid. The free cash flow number was, I think, really important actually for a company like this, and it was a really big number. Definitely beat expectations. So that helps. That helps, right? It helps make up for the Netflix catastrophe today. Netflix did lose some money on today. Now also trading a little bit higher. But yeah, you know, where are we with this Netflix? Netflix is up $1 after hours. Netflix down 35% still, even with being up $1 after hours. I actually think that this Netflix has room to bounce here. But I ended up focusing on this a good bit and did not have success. And part of me really wanted to keep it. Because it was well off of the lows, and I think that there's a lot of room to bounce. And my P&L in the stock was well off of its lows, and I definitely could afford on a swing trade to give it back down to that, which just gives me $15 worth of room. The flip side is I did close negative in the stock, and I've got rules that I think are really important to abide by over time. So I just didn't think, without having a good P&L cushion here at the end of the day, that it was something I could do, keep Netflix. And you know what? I started too early on this thing, and to be fair, if you looking at this chart, you wouldn't think it. I was trying to buy this thing on the way up when it was on the way down, not just, totally just catching a falling knife. And I just didn't get any follow through in any of the transactions. It was almost like every time it broke a number that was divisible by 5, like 240, 235, 230, 225, 220, maybe not all of them, but every time it broke it and snapped back up, I was buying on the way up versus whatever low on the tape it kind of put in. So I was sticking with the rules that I have for my trading, which is don't really catch falling knives in earnings companies. Try to trade it in the direction in which it's moving. So I'd be waiting for it to then trade back up through a level or an area that I thought was going to be important for the stock. And I would just get zero follow through on it. I remember that, I think it was 240, like it traded back through 240 and like upticked like 10 cents, which was probably me buying or something. And then new lows were coming in, and that was that. And then finally the trade was here. And the reason why and I've realized this later in the day, I've seen this before. When these stocks miss this bad, I talk about panic selling in stocks sometimes usually lasting for 15 minutes, but in some cases can last for like as much as 30 or even half a day. In this type of situation, when this stock is this badly beaten up, this opening price action actually is what we tend to see. And I actually think, I wish I could go back and look at a 5-minute chart of Netflix on the last earnings report, or a 5-minute chart of Facebook on this earnings report. But I think that they both were very similar off the open, just with brutal, abysmal selling of people just, I got to get out of this thing, and I got to get out of this thing immediately, just dumping the stock as hard and as fast as they possibly could. And it really took 45 minutes of just straight selling, 50 minutes of straight selling, before an actual pivot came in, and that was on maximal volume, and it was a doji there. That was finally the trade that worked, which I did call out probably meekly because at that point, you know, I honestly had tried it those bunch of times and just had zero success and zero success and zero success. And I honestly had more conviction at this point than I did earlier, though I was personally locked out at that point, which certainly didn't help me very much. And, you know, this is when the volume really maximized and it was kind of creating that pivot, and it was just super, super extended at that point. So I really thought that that could be it, but I just, I had already called out a couple trade back through like this 225 and stuff like that that just didn't work at all. So I don't know. I didn't have the conviction to really kind of call it out. But yeah, when it finally put it in that low on maximizing volume and went back through that 215, that did turn out to be the trade in it. And that also, by the way, corresponded with, and we were able to see this in real time and communicate it, some of these other stocks that were trading super weak bottoming out as well. Roblox particularly comes to mind. When whoever it was first brought up Roblox, they asked me about a double bottom off $36. I think it was one of our riches in the VTF, like a double bottom off this $36 area. And I didn't love it just because of the way that it was trading and it was still on the way down. So I think what I said was, you know, kind of maybe, but you gotta get some sort of signal that can give you the execution. And then this was the signal. You know, this was the signal. You would want ideally higher volume, but this is also why, by the way, and look, Roblox and Netflix are different companies, different types of companies. That maybe there is some similarity just in terms of they both are based off of like user subscriber growth is really the key to success in these businesses. But this is why you want to be paying attention to when you're trading the market. I was talking about this a little bit when I was getting on the radio in the afternoon. When you're trading the market, you need to be constantly just typing things up because it gives you information. Like honestly, it's information that Netflix is trying to pivot, and that, you know, Roblox is given that pivot. So when I think Rich first asked me about it, I was like, yeah, I don't know. You know, I see it and it's extended, but it's just trading down right now. You got to try to buy this thing on the way up. And then I changed my mind on it. And I hope you heard me communicate on that, and I liked it once it started to put this candle in, because at the same time it looked to me like Netflix was going to start actually really bottoming out. So if you were able to jump into that trade, it wasn't bad. You know, we decent risk reward there. We communicated booking some profit to the ADMA because the ADMA is your lower band of equilibrium, so it's the extent of the bounce that you can expect. End up getting further follow through into the space between the 8 and 21 EMAs. Another great spot to be booking some profit somewhere around here. And this did end up holding as the low of the day for Roblox. It did end up holding as the low of the day for Netflix. So, you know, if you were consistent and patient and really, again, didn't just catch the falling knife, but bought on the way up strategically, you actually could have made okay money in Netflix and Roblox. So to be honest, that Netflix trade, when it did even come together, it was $2.50 a risk, which is more than I would want to take there. I want that to be $1 or less on risk, on like the break through the area and kind of snap back type situation. Because even with risking $2.50, you know, you just catch a move back to, you know, you caught a move back to 228. It's not a phenomenally good risk reward there. Though I do think, and I still think this after the close, that there is room for this thing to bounce back to today's high over the course of the next couple of days. But you know, we'll see how that plays out. The only thing I really had right today was Procter & Gamble. Everything else, you know, wasn't good. Procter & Gamble, I really liked the earnings report. 160 was a key level. We talked about it in the morning meeting. Wasn't exactly sure in the morning meeting if it was going to open above or below. Originally, when I was doing my research, I thought it was going to open above, and I like the idea of being long versus 160. Well, it did end up opening slightly above. Like literally, I think the low is that 160 to the penny. So if anybody was able to get stock here off that 160 very, very early on, this was the trade of the day. But I'll tell you, I got thrown off this morning in doing my morning research by a couple of things. One was that I was expecting the market to gap down. I was expecting the market to gap down because of Netflix, and I was actually really surprised to see that not just the SPYs and the IWM were set to gap up this morning, but even the Qs were set to gap up this morning, and I was really surprised about that. I was originally thinking that we were going to gap down today, and then I was thinking that maybe if we could get some performance from the TLT and the VIX stayed weak, that some of these growth stocks would be like a gap down kind of buying opportunity, as they're just kind of selling off because of Netflix and maybe don't belong there, because the market yesterday was just so strong. Like, honestly, outside of, if Netflix didn't happen, to me, I really thought that this market, even though we closed right at the key level, right? We closed right at the key level for the SPYs, which is the 445 I keep talking about, and we still kind of closed right there, even with everything that happened today. I really thought that we were set to actually clear up on this consolidation and break up and have the market be back into neutral territory but short-term bullish. And then Netflix ruined that, and then I was thinking maybe that actually leads to a buying opportunity if that market strength can continue to today, but we gapped down, and then we ended up gapping up, and it kind of just threw me off, because I was like, all right, well, this is interesting, because we're gapping up, which means that the market is totally shrugging off Netflix being down 35%. And I know that in the Qs, because we looked this information up, that that Netflix is, just over 1% of the QQQ, so it's relatively small, but I think it's more about sentiment than anything else. The first major tech company, one of the FANG acronym companies to report, and just gets destroyed this bad, I thought would kind of hurt sentiment a little bit from these stocks. But then when I'm seeing, the whole NASDAQ is still even gapping up, the market shrugging this off, and then I'm seeing TLT set to have a gap up to above 120. TLT gave the move today that we were looking for yesterday. They just made it really hard to execute. They made it, and that's why it kind of goes back to what I've said about this thing. I usually like to look at TLT as for information and not specifically as a trading vehicle, because we were looking for this move yesterday. It didn't happen. It closed weak, and then it just gapped up and gave the move today. So I'm looking at what the VIX did yesterday, how strong the market was, the fact that we're gapping up, that TLT is doing this, and then when it comes to analyst upgrades and downgrades and initiations, we've talked about this 100 times, so don't got to get into too much detail. I don't put any stock into what analysts have to say, as a rule. And the main reason for that is because they're not worth their salt. All they do almost always is chase price. The stock goes down a ton. How many downgrades and price target decreases did Netflix get this morning? Like, every analyst on the street came out and lowered their price target and downgraded Netflix this morning. It's like, congratulations, you're a genius. So, all they do over and over and over again is chase price. And again, we also saw this morning a bunch of, energy and material stocks get their price target increases. It's basically like, oh, stock went up too much and my price target increase isn't high enough, I better raise it. So I, for the most part, don't really care about what analysts have to say. But I'm looking at the market shrugging off Netflix by gapping up. I'm looking at the TLT gapping up and then giving continuation. I'm looking at the strength I saw from the market yesterday that was really kind of led by tech. And then I see that an analyst actually puts himself on the line a little bit and gives some lofty kind of upgrades, initiations, and price target increases on a lot of these growth stocks. And I was like, wow, that is actually interesting to me, because you don't see it happen very often. And maybe someone can even copy and paste that information, because I don't remember all of it. But they upgraded Palantir to a buy with, I think, a 36, increased their price target. Not the opposite, not what every other analyst does. Every other analyst on the street's got a price target at $35 and goes, oops, it's at 12, let me lower it to 20, and then in a month I'll lower it to 15 so that it looks like I was right the whole time. This person comes out and upgrades it to a buy. I think increases the price target to like 36 or something like that. Puts Peloton as a buy. Puts Snap as a buy. Puts Facebook. Upgrades Facebook to a buy. Initiates DoorDash, which is a company I really don't like. I really don't like Palantir either. Initiates that with a buy. And I just say to myself, wow, this is really interesting. Maybe these things can get rocking and rolling. Now, I guess the good part here is that for the most part, none of these triggered their levels because they just got destroyed so fast, so hard. So like, Dash, I was looking at a buy through um, 108.50. It's the high today. 107.65. So if your buy is 108.50 in DoorDash, how much money did you lose by going long DoorDash today? The answer is nothing. Facebook, I said buy through 220. Well, if your buy trigger is 220 in Facebook, how much money did you lose today? You lost nothing in it. Snap, I said buy through 35. Same exact situation. Peloton, buy through $25. What's the high today? $24.50. Palantir was the only one. Palantir, I said buy through 13 to 13.20. So I know a couple people lost a few dollars in Palantir today, and it actually was. All those names I just typed up were destroyed today. Were absolutely destroyed. Look at that Peloton candle. Look at the Snap candle. Oh my God. The Dash candle. They're so bad. Palantir was actually the one that ended up holding up best, but still wasn't enough. So, the good news is when your ideas, and this is why, by the way, it's so important to have your idea with a trigger price. It's fine. It's totally fine that I came up with this idea for all these stocks, right? I had a logical reason behind it. I analyzed my big picture technicals to figure out what the trigger price would be. We know that these tend to be momentum stocks, so really we want to be buying them high to sell them higher. We want to be buying them on the way up. And there's nothing wrong with doing that research, creating your level, putting your alert out, and then having none of them trigger because they all went straight down, and you don't lose anything as long as you're not like. The thing that you want to make sure that you don't do is say to yourself, oh man, like I believe in this Peloton idea so much, or this Palantir idea so much that I'm just gonna buy it no matter what. I don't even need to wait for my trigger price. I'm just gonna buy it. Oh, it's on the way down. I can buy it at a discount. Like, even thinking about all that stuff, it's not the way to do it. If you just know your trigger price, have your alert out, you wait for your trigger price, it never triggers. You don't lose anything when the idea fails, right? And that's what's actually so important. So my idea today totally failed, but really none of them triggered except for maybe Palantir. So hopefully nobody lost any money on them. And then again, Procter & Gamble was a great trade. And then with none of those triggering, Netflix just became a focus of mine, just trying to scoop up a little bit of a dip on the degree of downside extension off those horrible numbers. But I was too early. There were too many people that were out of the money on that thing. I did try to buy it on the way up, so I'm not that upset with myself. I did lose money in Netflix today, but it's not, it's not a killer number or anything like that. So I can't be too upset about it. But yeah, just an interesting market because the SPYs actually still held up really well. 445 is still our key initial spot here for the SPYs. The IWM held up above 202 all day today, which is still really important. The Qs were obviously weaker, and the interesting thing was that these growth stocks though were just deplorable. And this is what I kept looking at. I was saying this also in the afternoon meeting. While I don't agree with everything that Kathy does, one of the things that she had said to me, which I thought was just a really cool kind of concept and idea. I listened to her say this on a podcast at some point in the past, and I can't not agree with it, is that the NASDAQ has evolved into something different than what it used to be. The NASDAQ of the 1990s, 2000s was this very speculative tech index, and it's really not that anymore because it's market cap weighted in what some of these companies have done. Apple, we were looking at these numbers as a team here this afternoon. Apple, I think, is 11.5% of the NASDAQ. Microsoft is 10% of the NASDAQ. Amazon is 7-8% of the NASDAQ. Tesla's 4.5% of the NASDAQ. Like the NASDAQ is no longer, in my opinion, because those percentages are so high, and Apple definitely could go down. Apple definitely could have a slowdown in their business, of course. Apple definitely could see multiple contraction, which is a lot of what's led to the recent rally. It's not that there's no risk in a company like Apple or Microsoft. There, of course, is. But they've got so much cash. They've got such an established business that it's not what those companies were in the 90s or the 2000s when they really were speculative and weren't worth trillions of dollars. And I do like looking at this ARK ETF. Again, even if I don't agree with everything that Kathy does or her thought process or the stocks that she gets involved in, and I've complained forever, even when she was hot. I complained forever that I thought her execution on her ideas was atrocious. Like, they don't care. She doesn't care about price. Every time I look at and that's one of the cool things also that I give her a little bit of props for, is that you actually get to see every single day what she did. She never cared about price at all. She was just like, all right, gonna buy some of this and some of that, and hey, this looks like an okay idea, whatever, some sort of technology I'm in. Definitely don't agree with everything that she does. But if you want like an ETF where you can get a quick snapshot of like what a lot of these super speculative growth companies look like, you can look at her ETF. And maybe similar to the NASDAQ, post 1999, maybe this does become something similar where, how many companies that were tech companies went bust after the bubble blew in 99, 2000, how many of them became trillion-dollar companies? Well, a lot more of them went to zero than became worth $1 trillion. But you do have, Amazon, which was a $2 stock, worth what it's worth, and you got Apple, almost going out of business at a certain point, being worth what it's worth. So, I don't think it's entirely unreasonable to think that maybe one or two of the companies that she is involved in do really grow into something, and a lot of the other ones will probably be worth nothing or worth not a whole lot or don't really put things together. So I like to just type this up during the day just to get an idea of broader speculative growth. And ARK was down 5% today, so that's kind of representative of a lot of things that I think got whacked almost maybe as a result of sentiment coming from Netflix. So that's it. That's all I got. Definitely not a fantastic trading day for me today, which I'm upset about because I kind of thought I was gonna have a good one. Sometimes right? Sometimes you kind of just know, like things are lining up for me, and I kind of thought things were a little bit today after yesterday's close, despite what Netflix was doing. So I definitely did not have a fantastic trading day. It is what it is. Procter & Gamble was definitely my best idea of the day. It worked out phenomenally well for anybody who caught it. But the other things just, they didn't go, they didn't trigger, and it just, it is what it is. We'll see how the market continues to set up here. So that's all I got, and I'm happy to. Oh yeah, Walmart. And you guys had brought up a couple of good things also. That FE. I think Chinggis brought this one up. This gave great continuation off of a bullish pattern here on that upgrade. Walmart was mentioned as a beautiful pattern coming into today. I didn't want to be involved in this because I tend to not have a lot of success with this stock, but beautiful inside and up breakout of this wedge. I guess you should call that an ascending bull pennant. But there was definitely some stuff out there. Consumer staples, once again, extremely, extremely strong. Financials, they gave back some, I guess, here off their highs. Still green on the day though. So there were some sectors out there that kind of gave follow through. It just tended to not be where my eyeballs were focused for the day outside of this Procter & Gamble trade. So again, that's all I got, and I'm happy to take a look at any questions, comments, concerns, anything you guys got. SEV is running after hours. Yep, it is. I don't know what's going on with that. What's our Tesla doing now? Not great, honestly. Tesla. It felt to me like when that Tesla number first hit as a beat, and I got to look more into the report, it felt to me like Tesla wanted to go down when I was looking at the price action. It's like it looked like it wanted to go down no matter what the numbers were. And then that free cash flow number came out that honestly looked so good that Tesla almost seemed like to pop a little bit in spite of itself. So it'll be interesting to see here. It's up, off of where it closed, but it's certainly not giving tremendous upside follow through off of what initially seemed like decent numbers to me. Nvidia and AMD look bad. AMD once again attempting to get back towards that $100 and failing. Nvidia is still holding the key 210 level, but every time it sits in front of it, it's a higher probability that it breaks down. SSMH, yeah, look at that. Look at that gap up. We used to call this a gap and crap. Am I allowed to say that, or am I going to get in trouble with compliance again? We used to call this a gap and crap. Gap up, and I guess you get the story here. Just totally fill the gap there. And this was part of what faked me out a little bit this morning, just seeing the strength in some of these stocks despite what Netflix was doing, and then they just totally sold them down anyway. But AMD in particular, I think, looks terrible right now. Which makes sense, right? Let me look at some more of these stocks here. How's Micron and AMAT doing? Micron, not a good-looking candle. AMAT, not a good-looking candle. Intel, a little bit better. It's interesting because some of these stocks that are in the SMH I feel like are so different from each other. And Texan is in it too, right? Texas Instruments. Like if you look at Intel and TXN versus AMD and Nvidia, they're semiconductor companies, but I feel like there's like a night and day difference on them. You got Intel, which is like a value stock almost, versus Nvidia and AMD, which trade at these pretty lofty multiples still, and are really kind of growth stocks. So you're seeing more heaviness out of the growth type high multiple semi names than you are in some of the others. But yeah, it's not looking great. Mike L saying that Tesla needs to get above 1035 for more than an hour to impress me. Yeah, these highs from yesterday, I can get behind that. This Tesla needs to get above 1035. Totally agree with you on that. Anybody else have anything? Yeah, United had earnings. Bill just posted the numbers. If China invades Taiwan, will they delist all Chinese stocks? I have no idea. I don't know. I copy and pasted, and I've spoken about this in the past. I copy and pasted this morning because there were comments out of, I don't remember exactly what the comments were, out of the China-Taiwan situation. And I copy and pasted what the United States' official stance is. Nixon's actual language there, when Nixon said in 1972 that the United States recognizes Taiwan as part of China. So, I don't know. I just think that the United States kind of needs to be, for lack of a better term, a man of its word. If that's what we said, if this is what we said is our official stance, then this is not our business. What I think, and I've said this also in the past, where something could have been done is when it came to Hong Kong, because Hong Kong actually has a contract, and even though the United Kingdom is giving Hong Kong back to China over time, the contract is in place until 2050 that Hong Kong is supposed to be able to have, and I don't know the exact language there, but some sort of economic freedom or whatever, not be subject to Chinese government rule in the same way. So if we just stood back and watched when China basically took over Hong Kong, when there actually was a contract in place that says that it doesn't have to be that way. If we took a step back and did nothing there, how can we step in and do something with Taiwan when we literally have said the opposite? We've literally said it's our policy, the United States policy, that Taiwan is part of China. So I think it's none of our business, and I think it's crazy to me that, and I understand why. It's always about money, right? It's always about economics. It's about Taiwan semiconductors is really what it comes down to. The United States doesn't want China to be able to have full control of Taiwan semiconductors, but this is the United States government policy. So I don't know. I am probably in the minority of the thought process here who understands kind of history on what our official stance is, but I don't see how we can do anything to go against China when it comes to Taiwan, given what our official policy stance is. So I therefore don't think that we should delist Chinese stocks from U.S. markets over anything related to Taiwan. But again, my thought process does seem to be in the minority of people who understand kind of history there and what we've already established. So I won't be surprised if we do something, because as a rule, the United States loves to just meddle in everybody else's business. So I don't know. That's my thought process. From Who's Up? Do you have any candlesticks that you look for in a 5-minute that help you have conviction? Sure. It definitely depends on the type of trade that you're looking for. And I have access to, or you may have access to, or you could get access to a candlestick class that I have where I kind of go over some of this information. But there's, as your question is kind of broad here. Are there any candles that I look for on a 5-minute chart that can give me conviction? The answer is absolutely yes. But what type of candle I'm looking for is going to depend on the trade. Right? Like, with Netflix, I think you could have had some conviction of a real bounce coming off of this candle. Because this is a hammer doji. It's actually almost a dragonfly doji on maximizing volume. When this candle comes in, it means that you have a greater than 50% chance of getting a retracement back to at least the 80 MA. And that's exactly what happened. So if you were looking for a bounce in Netflix, and especially with the extension and the volume confirmation, this candle here should give you conviction. On a different type of trade, a trade that's going to be more with trend or with momentum, seeing the right type of ignition candle, like a Mariposa candle on high volume that closes at highs going through a breakout, seeing that is another type of candle, that would give me real conviction that this trade's going to work and I can get continuation off of it. So yeah, definitely broad question, but I hope that helps. From Ahmed, is the selection only based on momentum? I apologize, Ahmed. I'm not sure what your question is referring to. Is the selection of what only based on momentum? I'm going to need you to clarify. And until you clarify, I will just continue to move down. Is the selection of stock, like my selection of stocks, like what I'm looking at in the morning? It's not necessarily only based on momentum, right? Like I take with trend trades, I take with momentum trades. I will, though I don't like them as much, I will take counter trend trades also, like the Netflix trade here that we discussed. So I take a bunch of different types of trades. I don't only trade momentum stocks, but I do generally only want to trade things that I think are going to be able to move. So like, and honestly, this maybe has been a mistake, but a lot of these consumer staple stocks, which have been performing so well, I don't even really look at them as part of my research. It's like I don't consider, and a lot of utility stocks also, they've been so strong, but I don't, and again, this chart looks fantastic, this Coke chart. Look at this move, but I don't really consider these to be good technical movers. So I don't really look at them. I don't look at like a Southern, like an SO either, like a utility type company as names. But and we've talked about this in the past. Maybe that's my mistake. these maybe, you know, an SO and a Coca-Cola, maybe they're not great day trading vehicles, maybe they're not great movers, but hell, if you had a thesis on money rotation going into consumer staples based on rising interest rates and inflation and everything else that's going on, and you found yourself a good technical entry and you put these on as swing trades, these have been great performers from a swing trade perspective. So I think that they're very hard to day trade, potentially really good swing trading stocks. And for me, you know, I do a lot of swing trading, so there's no reason why I can't be involved in them. I just also, you know, even with the things I swing, I like to actively trade around my core swing position, and that I think is lacking in like a Coca-Cola. So that's part of why I tend to not look at these things. But you know, again, maybe that's my mistake, and you know, at least we were able to focus on energy stocks as a team, because you know, these consumer staples still really for the most part haven't gotten on my radar too much outside of Procter & Gamble today because it was on earnings. Same thing with utilities. But you know, we saw some serious momentum type moves actually happen in some of these energy stocks, and this is another sector that, you know, by the way, this sector was absolute dog, you know what, for just years and years and years. For my entire trading career, basically, energy stocks have been just garbage trading vehicles until, you know, at some point last year, to be honest, and then with fantastic continuation through this year. So, you know, these things I would say are not momentum stocks either generally, but they've been trading like it on some points today and have been giving us really good moves. So I hope that helps, Med. Yes, just I guess it's a follow-up on what we're already talking about, so not to jump ahead of other people's questions, but Rich saying, at one time you had a very negative bias towards oil stocks, didn't you? And the answer is yes, and I changed, you know, because we have to adjust based on new data, and we have to adjust based on how markets evolve. You know, for a long time here, for a lot of these years in here, I was very negative on oil stocks. And the price action confirms that I was right with that thought process. You know, they were just the supply and demand situation, which has created the thesis that helped us get long energy stocks, was the opposite for years. Right now we have a supply and demand situation with energy where there's not enough supply and there's been a lot of demand coming out of COVID. But for years it was the opposite. There was too much supply. You know, in the United States was pumping and pumping and pumping. There was too much supply. It eventually led to a blow up in a lot of those energy type stocks because of the amount of supply that was out there. And that was at the exact same time that people wanted to start looking at renewables because of environmental reasons and everything else. So it made sense for a long time here to be negative on these stocks. And look, you know, I'm not exactly going out there and hugging trees, and I own a car and all that stuff, but I'm not entirely immune to the idea that you know, climate change is man-made. Climate change is a thing that we have to deal with as a people. I see it as a skier, but it doesn't mean I'm afraid to go long energy stocks when there's opportunity to be able to make money in them because the story changed. So yeah, scrolling back up here a little bit. Brandon saying that reopened names are really on fire. We need to look for a pullback. Okay, let's keep an eye on it. Robert, can I review IBM? For sure. Yeah, IBM was another one. I was super impressed after hours with this earnings report. I mentioned it real briefly in yesterday's afternoon meeting. IBM is I think that the new CEO has come in and has entirely changed the game when it comes to IBM. And IBM, which has been such a dog of a stock, is maybe potentially going to be a real player again, though I think they still have some work to do. But anyway, let me read the rest of your question. Could you review IBM? We broke 133 level right before the market opened. We broke the 133 level right before the market opened, I'm assuming to the upside. Would you be looking at some entries there? Yeah, so I didn't have IBM, despite my liking the report, on my list for stocks to focus on today. Though one of you guys brought it up and brought up 133 as a potential buy spot, and that was when we looked at it as a team in the morning meeting. It was trading below that. I remember. So I guess at some point during the morning meeting, it traded through this 133. My thought process on it was, as much as I liked the earnings report, I was actually afraid to trade the 133 level because I thought it was gapping up a little bit too big there to trade it. But if you really believed in that 133, I guess your question is, could it have been in play? Maybe. I think at this point, I see this low as 133.80, 133.38. But I think at this point you're not trading the 133 level. I think you're more recognizing that the stock is above 133, which is important. But this is the same trade as man, I don't remember what stock it was that we reviewed as a team yesterday, but it was a very similar chart where I think the first bar on that one was red. This one happens to be green, but it sold down quickly into that ADMA, and then at the low we saw bullish option flow come in. Someone had mentioned that. I don't remember which stock it was. Maybe one of you guys remembers. And then it created the pivot right off that equilibrium area and then kind of went. So I think with this type of trade, we know the importance of this, ADMA on the 5-minute catch up when there's news, and that a lot of times is exactly where you see the bounce. We saw it yesterday, we saw it today. It was plug yesterday? Yeah, plug yesterday. Similar, right? Had the news off the open, a little different than IBM on the first candle, but the principle's the same. It touched the ADMA. This is when the bull flow hit, and then created that perfect pivot there when it's no longer extended on that time frame to have continuation. Now, look, I'm not telling you guys to buy the ADMA in stocks that gap up. I'm telling you it's a spot to pay attention to because the stock is now no longer extended on that small time frame, and it is very, very typical that you'll see a pivot there, and this can be a good trade when you're getting a signal that the pivot is actually occurring. So we saw it in plug, and again, I wasn't watching IBM at that time, but we saw it, exact same thing here basically in IBM. And then you want to be thinking in the back of your brain, Robert, that 133 is your important level, and the ADMA here is touching, and the stock is creating this pivot above what your key level is. So that means that it makes it even better, right? So that would be kind of the way that I'd be thinking about this IBM. Hope it helps. Yeah, Geoff, it's definitely of the Taiwan Semiconductors is absolutely of strategic importance to the United States, and that's why we're doing what we're doing. But in reality, it's, I don't know. Maybe I am a tree hugger. I wish we would just all get along. Why can't we just all get along and work towards, I don't know, work towards the prosperity of the human race? The world is just so small now. And they're making these new airplanes or whatever where you're going to be able to like fly from New York to Shanghai in a matter of a few hours because it goes like almost into outer space to be able to land over there. Like, the world is so small. I was communicating with 2 friends actually who live in China, just this morning. One's in Shenzhen and one's in Shanghai. Just kind of chatting a little bit, and even with the time zone difference there, it's just so easy to be able to have this communication and conversations and things like that. Like, why? Let's just work with each other so that we can all prosper. I wish it was that simple, right? From Paul G here. When looking to trade around a core, is there a minimum number of shares for the core versus active shares that you recommend, or is a percentage of the core? Yeah, it depends a little bit on the price of the stock, but I don't have a minimum. I'm going to say that you should have a sizable amount. That should be some thousand amount of shares, right? Like, not 400 shares. And honestly, even 1,000 shares doesn't leave, and this is after your one-to-one kick. Even 1,000 shares maybe gives you a little bit to work with, but not too much. You really want to, after you have your risk covered, be able to have at least 2,000-3,000 shares probably to be able to play with on a percentage of that, where the idea is that you want to try to be able to make cash flow off of kind of volatility by selling some and rebuying it and working ranges kind of back and forth when you're already in the money, but at the same time not selling such a high percentage of the stock that if you can't buy it back because the thing just blasts off, that you're missing out on a huge amount of reward, if that makes sense. So the math there has to make sense where, you know, if this stock wants to just range out for the rest of the day and you can just make, you know, $25 kind of over and over and over again by kind of working that range on a small percentage of your position, you know, with 100 shares or, you know, 200 shares, do it with $50 over and over and over again by, you know, kind of trading back and forth in 25-cent increments. That can be a good way to add some cash flow to what you're doing in you know, a midday market, a sideways market, or on a swing trade when the stock's having a rest day. It could potentially happen all day. But the math has to make sense where if you sell that stock thinking you could rebuy it or work that range or whatever, and then it just goes, that it's not going to have a real negative impact on not making money because it just went, right? So you gotta ask yourself, like, if you take this 100 shares and you sell it and you try to buy it back 25 cents lower, and you sell it and you try to buy it back 25 cents lower, you can make that $25 each time, but you got to do that 4 times to make up for not having that 100 shares if the stock goes another $1. Right? That's how that math works out. So, and it might not be the end of the world if you miss out on making $50 if you got a core of 10,000 shares, right? And it might make sense the opposite, where it doesn't matter if you're missing out on that $50 because you've got a core of 10,000 shares, and you're better off just trying to make that $25 as many times as you can by kind of working the position back and forth. And again, I know your question was on minimum, and now I'm talking about 10,000 shares, which probably isn't a minimum, but at that level, that it definitely, I think, makes sense. But you got to pay attention a little bit to your technicals, the trade that you're in, what the game plan was that you developed, you know, things like that. From Steve, my buddy Steve from Denver, Neo, 3-month chart. I don't have a monthly on here. Probably should. I can look at a weekly and go back a little bit. So 3 months, so March, February, so back in this area roughly. Has not made a lower low. Yeah, so you got a high, you got a low, you have a lower high, but not a lower low. But it can't break up either. We're talking about big time frames here, right? So it's potentially building out like a really big time frame wedge, or that lower low still could come in. Or, you know, range. Sometimes stocks are just range bound. Assuming you would wait for a move higher to buy for a swing, wait above 50E? What's 50E? Roughly, I can tell you though, I would want to see the stock above $25. Yeah, that's when you'd be breaking this pivot. It's when you'd be breaking this pivot. It's when you'd be getting above the 21 EMA, and you would have a high, a low, a higher. You'd have a high, a low, a lower high, a higher low, and a higher high. So that's a reversal process. So really above this pivot, but this pivot's not going to be enough for me really. I really want 25 and the 21 EMA to break also on this weekly chart that I'm looking at. Hope that helps. All right. Looks like I got through things. It's 5 o'clock. Hope everybody had a good day. Hope everybody was able to focus on the right things. Unlike me, I was not focusing on the right things today. You can't be perfect every day. I think overall as a team we do fantastically well. The ability of our consistency as far as focusing on the right things as a team, I think is incredible. So to have an occasional day like today where I can say for myself, at least personally, I wasn't focused on the right things, but it also didn't necessarily hurt me because nothing triggered, it is fine. Overall as a team, the consistency of approach and the consistency of focusing on the right things, focusing on energy on the right days, focusing on growth on the right days, on big tech the right days, on the indices the right days, has honestly been, I think, really impressive with how consistent that we've been on point with that. But you're never going to be 100% on it. And you know, that's why it's always a good thing when things just don't trigger. And I know a couple people lost money in Palantir, which was the one that triggered, and you know, just is what it is, I guess. But you know, every day's a new day. This last 2 weeks, I still think has been very tricky for this market, with kind of where we've been in this slop in here. But we'll see what happens with Tesla. We got, you know, earnings season's heating up, right? Earnings season's heating up. We got Tesla. We'll be I don't know the exact dates, but we have an Apple, Amazon, Google, Microsoft hitting before you know it. We're gonna have a lot more of these events each day. So have a great night, everybody. We will reassess everything tomorrow morning like we always do.